As 2007 begins, there is what could be called an inclined double bottom range due to the strong break higher, but some may consider it too inclined and simply consider it to be two upswings forming an uptrend. In any case, once the minor downswing area is surpassed with strong bullish price action, an uptrend is underway. If this was a stock chart with volume, there would also be high and/or constant bullish volume as well. The descending channel is broken by another sustained bullish surge to complete a larger bullish continuation. A compact double top produces a distinct break that is relatively short-lived and small in scale. This is due to the bullish context and the small size of the double top. A wider flat top range is possible if short-term bullish sentiment doesn't remain overwhelmingly strong. A classic breakout was helped by a general ascending triangle outline, forming the gradually stronger incline out of the neutral to bullish context. Short-term bullish strength is helping the larger uptrend and increasing the chances of another bullish continuation rather than a bearish reversal with a double, triple, or flat top. The failed double top ranges presented slight inclines to add the characteristics of ascending triangles rather than simply being horizontal resting ranges within regular bullish continuations. The extended uptrend lines from the ascending triangle formations highlight the approximate trajectory of various uptrends and smaller upswings during a long-term reversal into the next decade. From July to September, there was a regular horizontal range in the bearish continuation of the larger downtrend, prior to what appears to be a large double bottom in development. The double bottom has not completed, and a strong downswing doesn't return exactly to earlier lows because of a clear incline developing. There is one trend line approximating reversal candle real bodies, and a lower uptrend line approximating the lows of reversal candles. Like other charts with no readily available volume, this is helpful in identifying an approximate trend trajectory. Even if it was a stock chart with volume, this is also helpful. As the original uptrend begins to weaken, downtrend lines from the failed double bottom can become useful. This is also the case if a bullish reversal emerges again at prior lows, since the trend lines can still identify possible areas of greater resistance potential. Since the downtrend line is prevailing, the old uptrend lines can be removed to reduce clutter on the chart. Due to the mainly horizontal origin of the failed double bottom range, the formation of a descending triangle was less apparent. The two lower downtrend lines could have been mistaken for small downtrends within the horizontal range. Regardless, the clear lower 0.77 range was a key barrier pointing at a further drop, even if the descending triangle outline wasn't immediately identified. The weaker influence of the two lower downtrend lines can also be seen later on, when they have relatively little impact in repelling minor upswings. The old descending triangle ranges provide good reference for the upper boundary in a large range that ends 2015. There are slightly lower double bottoms from July to September, to add the aspect of a reverse head and shoulders outline. but the overall formation is primarily a flat horizontal bottom. As expected, there is still a slowed uptrend prior to the bullish surge in early 2016 due to the descending trend line from the descending triangle in conjunction with the 0.77 range. Here is a rare case of consecutive failed head and shoulders, that are the variance with two pairs of downswings for the shoulders, and even a declined double top. The ranges and levels derived from these major formations are invaluable in precisely identifying various ranges in the following years. The ranges and levels grow old as the years pass, but generally maintain influence, since many swing points form directly on or around them. The only major exception is the period transitioning into 2020, when the old 0.83 levels are less precise. During periods of highly bearish and volatile short-term movement, this could have easily been remedied by the outline of a fairly strict double bottom range being highlighted. This range would only be slightly difficult to identify into the first weeks of 2020 if attention was too fixated on the minor downswing points that took place prior to the formation of the second upswing that defined the double bottom outline.